Want to move but not sure how to move your furniture from point A to point B? Well, guess what? We've got the solution. Uncensored, together with Drop It, which is a furniture removal company, have partnered up to bring you an exciting opportunity where you can win a free move.
Whoa, that's really an exciting opportunity, Bratamza. So just a little bit of background on Drop It. So Drop It is a reputable furniture moving company here in Africa, and their services include the following: goods in transit insurance, a trained driver to transport your goods from point A to point B, fixed and guaranteed prices. You can also track your goods on long-distance trips. Now here's another exciting opportunity. Stand a chance to win one of 3 local moves. To win, simply comment your pickup and drop-off area in the comments section below. But that's not all. You can also stand a chance to win 2 nights away with 2 people in Northwest Brits, including a boat ride for 2 hours. To enter, you will need to refer as many people as you can to the Drop It Facebook page, and the people that you have referred will then need to comment your name in the comments section below and also like the page. However, the winner will only qualify if they are also following the page. So then this begs the question, why Drop It? Simple, because they drop everything that they are doing to come help you with your move. Good day, hi. How's everyone doing? Welcome to Uncensored _ the Truth About Money. Thank you so much for joining us. We truly appreciate it. So, this is part 2 of investments, right? We're talking about investments, right? Last week we did an introduction to this topic, and today we're just continuing where we left off. As you would know, I'm your host, Kaya Junior Masango, and I'm with our financial DJ.
I'm not residential DJ.
Residential DJ, man. Bratamza Madlala, how you doing, bro?
100%.
Wonder now you are a qualified financial advisor. Well, is the word qualified or what?
Just a financial advisor.
Financial advisor.
Yeah. Now there's levels. There's the level is like certified financial advisor, CFP.
Oh yeah.
Yeah, no, that's
that's you.
No, that's not there.
Not there yet.
No, that's after 3 years, move.
3 years.
Yeah.
That's not a long time.
That's not a long time. I'll be there. We'll be on this platform. Say, today I'm a certified financial planner.
Yeah. How you doing?
100%, brother. Weather's good today. It's about warm.
Yeah. We're in August already.
Yeah. It's no. We're getting there already.
Also, just sorry, but also just thank you to our sponsor, Drop It. They're also running a competition. You might have seen the video just before this. So please do what it's a legit competition, I promise you. So you can win a getaway with yourself and maybe your loved one or whatever the case may be. And also you can win a free local move. So please just do what you need to do. And yeah, so let's start. So we're talking about the best investment opportunities for beginners in South Africa, right? So let's talk about that. So I see here there's your exchange traded funds, EFTs rather. Do you mind just explaining what those are a little bit more in detail?
Yeah, so exchange traded funds. So previously, back then, before EFTs. So when someone says, I want to invest in gold, right? They'd have to go maybe to the JSE, acquire a broker, pay some broker fees. It was a lengthy process, and the entrance into investing into those platforms was quite high. So you'd have to have like a large sum of money for you to get into those platforms. So as time progresses, technology, research, and so forth, so they've came up with the exchange traded funds. So what they then do is that they pool certain shares together, and then you now buy a bundle of that share, even if it's 0.001 with any amount. So from, I don't know how much it starts at now, because I know there's even low ones like 500 Rand, that you can invest on a monthly basis. So that's the nice thing about it, to say that you can buy a bundle of shares, for a very low amount. So like 0.001. So people now have access to all of these platforms now. If you want to invest in oil, if you want to invest in gold, as I said, silver, if you want to invest in certain resources, so you are able to do so. So yeah, those are your exchange.
So in terms of like
Trade funds.
investing, what do you think would be the best area to invest in? Like, is it like resources or currency?
No, it all depends on your financial goals, as said earlier on. So there is no no financial advisor in today's times will tell you, no, this is the best place to invest your money in. Because what happens is that when a financial advisor says this is the best place to invest it, is because they're receiving a certain commission from it, right?
Oh.
Yes.
Okay.
It's like that. It's like going into a BMW dealership. So, hey, what do you think about Benz? Should I buy a Benz or BMW? But you're at BMW. Buy a BMW. You know what I'm saying? So it's the same as well. So that's why people just need to be very careful with certain financial advisors or brokers who just want to sell only one product. You know, if brokers are much better because at least they've got a lot of different financial institutes that they can represent, right? So, but even so, you need to ask them, okay, what other platforms can I invest in? So there's no, okay, this one is good, this one is bad, right? Because there's people who invest when things are bad. There's people who invest when things are good. So as I said earlier on, it all depends on your objective. Or if your objective is to get a certain amount on a monthly, after 5 years, there's certain investments for those. So like your resources, your properties, your equities. So those are more on the on the aggressive side. So those are nicer for longer term. Yeah. So those is if if you are investing for like 5 years or longer, so get into equities. But if you're not gonna be investing for 5 years, no, get into something that's more conservative for you, right? And this instant gratification thing that's happening of late, where I want to have 10,000 rand, in 2 months from my 1,000 rand investment. Yo, it's dangerous, man, and a lot of people are losing money. And when they lose money, then they say no, it's a scam.
Definitely, sure. Yeah.
Then they say it's a scam. But exchange traded funds, so those are the nice platforms that you can start out with, where people can learn or get into the habit, because investing is also a habit as well. It's a psychological thing more than anything else. You have to get into the discipline of putting money away and ninja, or actually not wanting to get something very quickly. So if I've got 100 rand and I pass by McDonald's, so previously, okay, let me go into McDonald's, order a Happy Meal, or not a Happy Meal. I'm too old for that. A Big Mac,
Big Mac.
a Big Mac. Big Mac, $60. All right, cool. Get out. But now, okay, I've got an objective. I've got 100 rand. Ish, this 100 rand, I need to put it away. So now it's the thing you're going to say, I must not get into McDonald's. I must keep on driving straight. Even though the temptation is there, let me keep on driving straight. So it's those disciplines that you need to build into your system, so that you end with that amount at the end of the term. Yeah.
And with these, there are no restrictions. Anyone can, as long as you have the money, you can
Yeah,
start
so
investing.
you can start investing. Most companies, they offer these now, these exchange traded funds. You can invest on if you have 5,000 rand as a lump sum, you can put a 5,000 rand as a lump sum. If you've got money that you want to put away on a monthly basis, you can do that as well. So, and another thing is that they are not restrictive to say that no, you can't get your money, or the fees are too high. No, it's basically as is. I've got money, I want to put it away. Done.
And you wouldn't possibly know how much dividend they pay out, or does that fluctuate?
No, it fluctuates. It depends also on the type of investments that you're putting your money into. So if you're gonna put your money into something, let's say like cash. So cash are like money market type of EFTs or ETFs. So those don't have any dividends. But you look at something like properties. So properties, they make the money from rental income. So from that rental income, they'll they'll portion a bit of it into like dividends and then put it back into your investment. So it's all depending on what type of investor you are and your objective as well. So not all investments, because I think there's more than 1,000 ETFs out there. So now for you to pick one and say which one is going to be tedious, you know. So hence I say, if someone wants to invest, reach a financial advisor, and then it'll be easier for them. But there's platforms that can assist, you know, online that can help you do, you know, your investment decision much better.
And then just quickly, if someone is new to this topic, that completely new, what is there a difference between saving and investing? And is it important to be able to clearly divide to clearly see the difference between the two?
Yeah. So that's a nice one. You know, nowadays, when I sound sophisticated, no, I'm investing.
Can't tell them you're just putting money under the mattress.
Can't you save, Andre? You know. So there's a difference between the two, although it's quite similar. But saving is basically putting money away for buying, let's say, clothes, to close off your accounts. You know, whereas investing is for wealth creation. So that's the bottom line of it. It's for wealth creations. Is to make more money for yourself and for your generation as well. So that's why people say, I'm investing in gold. You know, gold will appreciate in price. So in that said, even if I pass away, my kids will be well off than I was, you know, by them keeping the money in the gold. You know, whereas I know I'm saving, putting money in the piggy bank. So piggy banks are savings. So those are savings. I'm putting 5 rand, 5 rand, 5 rand, 5 rand, 5 rand. You know, it's not gonna, yes, it'll grow because I'm putting more money in, but because of the piggy bank principle, it's not going to grow. There's no interest on it. You know what I'm saying? Yeah.
So let's talk about the importance of, okay, maybe firstly, like, I must just remember that maybe there's someone new who's watching who definitely does not know anything about investing. But let's just talk about diversifying. Like, what is to diversify and how important is it to diversify?
So diversifying is the whole principle of don't put all your eggs in one basket.
Sure.
So let's put it this way. If I want to diversifying, we'll put it like in layman's terms, I'm gonna have money in properties, I'm gonna have money in, like you mentioned, taxis. I'll have money in taxis, I'll have money in spaza shops, I'll have money, you know what I'm saying, everywhere. So if one fluctuates, the other one appreciates. So not all of them will go down at the same time as well. So with in investing, we'll talk about a portfolio. So your portfolio has to be diversified. So by saying diversified is that you have to have a mix of, let's say, equities, properties, with a bit of cash and bonds. So a bit of aggressive investments versus a bit of, you know, conservative and moderate, so that even if your aggressive investments, even if it falls in value, at least your conservative and moderate investments, they're still able to balance it out. So that's basically what a diversified portfolio means. It just basically means don't put all your eggs now in one basket. You know, have a pool of investments that you can get interest from. Yeah.
And then I saw here when we were doing the research, is there a way that I can mentally train myself to remove my emotions from investing?
It's hard.
Yeah.
Because losing money is painful. I was saying it's similar to hitting your nail with a hammer. You know, investing is it's not nice, especially when you're losing. It's nice to win. You know, people don't like losing money, but you train yourself. And how do you train yourself with little amounts? Right, with little amounts. So you get into, let's say, unit trusts. So unit trusts, obviously, like they're safe investments. You look into your unit trust. Let's say you've got 100,000 rand parked in a unit trust today. Tomorrow, or let's say 2 months later, it's 110,000 rand, for example. And the following month is 105,000 rand. So now you've got the shock to say, yo, hey, what happened now? You know what I'm saying? But because of your goal, so your goal is what helps you not to be emotional about your decisions. Because you get financial advisors who say, I know, Junior, so you invest your money in January, you win 100,000 rand. 6 months down the line, COVID happens. Hey, Junior, let's take out your money. Hey, it's very risky there. Let's take out your money and put it somewhere else. That's false. Don't do that.
Okay.
It's not about. There's a saying in the industry. It's not about timing the market. Don't time the market. It's about the time in the market.
Okay.
Yeah.
Okay.
So I'm basically meaning that the longer you put your money in there, the better it is. As opposed to, I know, let's switch here. I know it doesn't look nice. Let's switch here. It doesn't look nice. Let's switch here. It doesn't look nice. And the thing is, the sad part about it is that 99%, well, financial advisors know 99% of the average Joe. So if you lost money, I can say, I know this portfolio wasn't doing so well because I've got more research of this portfolio than you do. So you're not gonna you paying me fees to basically manage your portfolio. But now, if I'm not doing my due diligence in trying to make you money and not switching all the time, then it's gonna be detrimental to you. But in your detriment, I can still justify it to basically put myself in the good books. Nigeria, man, you know, the property wasn't doing so well this year. Hey, what? You know what I'm saying? But if I said, Trina, just leave your money in there. We'll review your portfolio after a year. After a year, you review, okay, is it in line with your objective? Okay, it's not in line with the objective. Let's leave it in there for now. Let's not do change it. Let's leave it in there. Things will get better. And so people must not, if investing, it's all about winning and losing. So even if you've lost some money, don't pull out, because that's when you're going to lose even more money. So just keep in there, park it in there, leave it there for 5 years, or your investment objective, leave it in there 3 years, 5 years, whether it's 10 years, and you're good to go.
I hear you. And then we've spoken about this before. I think there's a whole video on it actually, just because of time. I'll just tag the video, but it's tax-free savings accounts.
Yeah.
I think we've went in depth with that.
Yeah.
And then fixed deposits.
So fixed deposits, so that's more for a person who who wants money locked away. So those are nice for people who know, Uguti, if I've got something where I can dip my hands into, I'm probably going to dip my hands into. So rather, let me have a fixed deposit. So fixed deposit, we put your money in a 6 months fixed deposit. You're not going to touch that money for 6 months. And if you touch that money, there's going to be penalties. So now, hey, if I go dip in there, I'll get less than what I put in. So people always want to try avoid the penalty side of it. So hence I was saying, Guti, for fixed deposits, it's nicer for people who know that they don't have the discipline. Yes, maybe the interest rates might not be so great, but it's a nice starting point to say that, okay, I want to put money away for 6 months. Let me just open a 6 month fixed deposit and leave the money and then park it there. You know what I'm saying? So it's nicer for people who know that they're not disciplined, because you need to be honest with yourself. Going back to the previous topic, the one on emotions. So I remember this was 2012 or 11 when Forex was coming out, when it started to become a buzz. There was a site, and when you open that site, they give you 200 Rand for free. When you open an account, they give you 200 Rand to trade, right? I don't know if they still do it now. So I open an account, and you can see the 200, but you can't withdraw it. I get it's only in the account. Okay, sharp. I see the account. Trading. I didn't know much about trading. Trading. I think it took me 2 minutes to lose that 200 Rand. Boom. I closed. I was like, nah, this is not for me. That's why I also don't play the lottery.
Only 2 minutes.
2 minutes, quick. So I was speaking to another guy at the bank. I don't know what he came to do. Oh no, his mother was doing something at the bank. Then I was just having a conversation with this guy. So he was into Bitcoin. Bitcoin was still starting out. I'm like, I lost 200 Rand in 2 minutes. So I says, my man, sit down. Let me tell you a story. He says, I had 70,000 Rand. When Bitcoin started, I had 70,000 Rand, and I put into Bitcoin, and I forgot about it. After 6 months, it was sitting at 1.6 million. All right, cool. He says, but now I can't take it out because I don't know how tax works. What. He says, I looked into it a month later. It had now dipped. I think it was now sitting at like 1 million Rand. So he says, in a month, I lost 600,000 Rand. He says, in 2 weeks' time, I looked into it again. He says, it's sitting at 700,000 Rand now.
No way.
He says, but I did not understand his law. I'm like, just take the money out.
Yeah.
He says, my man, I don't know how tax. He's chill that time.
Yeah.
I don't know how tax works in don't worry, man. As long as my money is still 70,000 rand, that's what I put in there. I'm like, my man, you reached 1.6 million.
Exactly.
Take the money out. It's like, no, man, don't worry. It's gonna appreciate because at least I get it now speaking on the terms of what he's telling me. So he had done his research, so he knew where Bitcoin would be. And look where Bitcoin now. You know what I'm saying? So I'm like, I wonder how much how much money that guy has now. You know what I'm saying? So imagine losing 600,000 in a month. But look at the guys at the top, your Elon Musk and so forth. These guys, they lose 400 billion, my man.
Imagine.
In a second.
Imagine.
So
let's look at real estate. This is obviously buying into property, if I'm not mistaken.
It's different.
Okay.
So there's buying into a physical property.
Okay.
So that's okay. I got R1 million. I'm gonna invest in a property and get rental income, right? So that's a physical side. So then there's what we call REIT, REIT. So that's Real Estate Investment Trust.
Okay.
So you get a company like, let's say, Liberty. So Liberty owns a couple of malls, including Sandton City. So they've got a real estate portfolio. So you invest in that portfolio. So you don't have the physical building, but you invest in that physical portfolio, and then you get the benefits, from investing there, because obviously they've got tenants in the buildings. So that's the two sides of it. So you can invest in the physical side that you see, and you can invest like in the, real estate investment.
Is this
trust.
high risk or low risk?
It's great returns, but the entrance into those are quite high.
Okay.
Yeah, into those investments are quite high. So there is some risk into it, but the returns are quite good. Yeah. And the thing is, you don't have to manage tenants. You don't have to do this. You don't have to do that.
So what's quite high, like plus minus? How much are we talking?
So when you say high, the thing is, a good investment, right? A good investment yields 10%, 12%, 13%. So that's a good investment.
Okay.
Yeah. So not this thing where 30%, 50%. Let's get that term out there.
Hypernation. It's gone now.
Let's get that term out there because I mean that's how can I put it? Yeah, that good thing, when your investment, for me to have a good investment, my investment is performing at 40%. My man, I know. Then you must check it real out good.
It's probably a Ponzi.
It is a Ponzi. You know what I'm saying? But it does not mean that you cannot gain that interest rate. But for me, let's as a financial advisor come to you and say, Junior, my man, there's this portfolio. It operated at 50% last year, man. Put your money in here, you'll make some good stuff. Run away. If I'm telling you about 15%, that's very good.
Okay.
So your real estate investments, they're playing around there, 10%, 15%. So yeah, but there's different ones as well. As much as there's different property investment companies out there, there's also different REIT investments as well.
So like what's the barrier to entry that you spoke of? Like, is it expensive to get into?
Yeah, the investment is expensive to get into. So they'll say, okay, and they don't open it all the time. So let's say release a newsletter. Okay, guys, for the month of August, we can only accept 100 investors at 10,000 rand lump sum. Yeah. So it's not as and when. With the ones that I've seen, it's not as and when you want to invest. Okay, no, they open it in tranches. And sometimes it's based on the projects they want to do as well.
But should there be an opening, you do recommend that if you have the money, get into it.
Yeah, no, get into it.
And then we also spoke about, okay, we'll just skip through retirement annuities. I'll also just tag a video. Government bonds as well. I'll also just take a video. And then unit trusts. Is this different from what we spoke about when we started the exchange?
Yeah, it's very similar. So with unit trusts, what they do is that I get it from with ETFs, they bunch all these resources and you buy a share.
Yeah.
So with unit trusts, we all all of us here together, we put in 500 rand, they pool that money in together, and then they buy shares or they buy certain type of investments. So it's a pool of people buying buying into a certain portfolio. Yeah.
Is there anything else, Pratams, on your side as far as investment goes?
Investment, do your research. Get an accredited financial advisor, financial planner, broker who's accredited to advise you more on investments. There's a lot of things happening nowadays. I was speaking to a friend of mine. There's this agricultural investment that's happening where you put 10,000 rand today. After 1 year, it becomes 20,000 rand. You invest, whether it's tomatoes, cows, whatever. So, there's different types, and there's some years back or a couple of years back, there was that WhatsApp stock fell. So be careful, especially with the investments that are yielding a lot of interest, very high interest. Be very careful of those because most of the time, those are just scams. Those are just scams. Previously there was the whole Triple M, saga, but they're just redefining them because Triple M, you do not have something physical, whereas nowadays, I know, invest in cows. I know, come to my farm, come see the cows. So put 10,000 rand away. You know what I'm saying? I'm not saying they are all fake, but please just do your research. Bounce it across, someone say, man, is this legit? Is it not? I heard about this. It's always nice to get a second view, These companies, they play on our greed. I know, I don't want my husband to know. I don't want my wife to know. I'm just going to put 10,000 rand. They said I'll get 20,000 rand in 2 months. You know what I'm saying? Now you lose that 10,000 rand. You don't go back and say, you know what? I made a mistake. What, So do your research, do your homework, speak to people. What do you think about this? The world is connected through social media now, Hey guys, put it on Twitter or wherever. Hey guys, there's this type of investment, or even Google, there's this type of investment. What do you think of it? People will respond, I know it's good, I did this. Others will say, I know, run away. And if they say run away, don't say, but when you did it differently, I'm going to do it this way. Run away. Just listen and run away. Yeah.
So now I guess it brings us back to the question that I started with, because you look at, for example, like resources, natural resources, you look at things like farming and all that stuff, and then you look at like investing into the one that we know through banks or like currents, whatever the case may be. So within those categories, which one do you feel like it's more secured and will yield better results and guaranteed results?
Actually, the thing is, there's no guaranteed results. There's better results, and it's all, as I was saying, based on the first question you asked in the previous episode, what are the objectives? So it's dangerous for us to say this will yield better results as this one here. You know what I'm saying? Because there's people who are making money in livestock, for example. There's people who are making money in the manufacturing space. You know what I'm saying? So for me, it's all about what are you comfortable with? What is it that you like as a junior? Maybe you are into farming. Go into farming, see what type of investments there are susceptible, when it comes to farming, and then go with that because it's something that you're passionate about. So you don't mind reading more into it, For example, let's say I love motor vehicles. There's platforms where I can invest money into, with motor vehicles, so do that and it'll be easier. But the nice thing about investing is that the more money you make, the more money you want to make. Yeah, that's, I don't know, it's some psychological aspect that has never been discovered. But the more money you want to make, the more money you want to make. You know what I'm saying? So, yeah.
It's important what you're saying, like understand like what you are investing in, like because that's very important.
Do your homework, man. Read the T's and C's. I was saying to someone, speaking to someone, TikTok. Né? You've got TikTok on your phone?
Yes.
Okay. I don't have TikTok on my phone. Né?
Yeah.
Besides the scrolling and sitting 3 hours just doing this, né? Which there is great content like Uncensored is there.
Definitely.
So people must read the T's and C's. So I get when you download the platform, it says T's and C's, you just click and then accept,
Most
download,
definitely.
then you are here.
Yeah.
But you know, if you read the T's and C's of a TikTok or any other social media platform,
Sure.
you give them the rights to attain whatever information you've got on your phone. So that's why sometimes you go onto Facebook. Let's say they're not linked, maybe on Facebook or Google. You were looking at grey couches. I want to buy a grey couch. So then you get onto TikTok. Man, there's someone who's covering grey couches. How do they know? You know, like, how do they know who's looking at me? No, dude, you accepted the T's and C's.
Yeah.
So even with investments, do your research as well. Don't. Yes, there's investments that are good, the investments that are bad, but do your research.
I'm so glad you said that, Brits, because you know most of the time you invest not really because you're under pressure, but because everyone is jumping onto this bandwagon.
Yeah.
You also find yourself, you know what I'm saying? Like what you just said now, like I'm more interested into like farming and stuff. You know what I'm saying? So as opposed to trying to force myself into like investing the traditional way, which is your Cetrix, why not just spend that money and time and energy finding out more about farming? You know what I'm saying? So it's very important what you say, like invest in what you are passionate in, because at the end of the day, either way, it's still investments.
That's
and it will, you know what I'm saying?
That's true.
With that being said, thank you so much for joining us, guys. We truly appreciate it. Don't forget, we are uncensored. On Instagram, we are uncensored _ the truth about money. We are on TikTok as well, as Pratamza has shared. On TikTok, we are uncensored _ financial edu. And thank you so much for joining us. Please don't forget to subscribe to this channel. Please don't forget to subscribe to this channel. With that being said, we appreciate you. Cheers.